Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update. This is for Tuesday, the 20th of February, 2018, about 2:17 p.m. Central Standard Time. Let me start by saying I appreciate everybody that wrote me on YouTube and wished me the very best. I appreciate it. I caught a cold. It was not the flu. And I still have some remnants, not bad at all. But it put me down. No ifs, ands, or buts. And I just said, you know, the heck with it. So you didn't get videos from me for a few days, and I missed it. I did put out my written updates. I did put out all my other research, and I am up to date. So what I thought was happening is happening. It's unfolding. Number one, I have said and stuck my neck out that you're no longer in that big bull market in stocks where you just keep going up. That doesn't mean it's over, that you've seen your highs. That is not what I'm saying. That leg is over. That leg that we got into at Christmas and carried you to the last few days of January, that is finished, done. What I didn't understand on Friday in the metal markets is once I saw Robert Mueller made the charges against the 13 Russians, why did the gold market and silver market go up? We're not going to war with Russia. Those 13 people aren't going to be extradited here. There isn't an awful lot you can do. What was that all about? If anything, it sort of washed President Trump's hands, as I saw it. Doesn't mean he can't get dirty later on, but it was a surprise to me. When I'm looking at the break in the stock market right now, yeah, I've been writing about this over and over if you get my market research. The market has changed its character. The gold and the silver markets, I think that they're now markets that are going to pay very good attention to what happens with the bonds and the notes. And they're going to be looking at what interest rates do. They're going to look at the FOMC minutes that are coming out. I just did Sky Business in Australia, and they're asking me what about that. And I said, why does it matter? It's old history. The metal markets are down. The stock market's in a trading affair. I'm more concerned with what Mr. Powell does now that he's the head honcho there and everything that is said with that. And I think that's how the market's going to absorb things. When we come over and we look at a weekly chart of gold, and that's all this is, it's an area chart it's called. And what I'm really looking at, each peak and valley is of a close. And I'm going to say the market is still in an upthrust. It's gone from 1313 to 1350, 320, and it's in a bit of a pullback. Very important to me is that the market is staying over the 18-week moving average of closes, which gives it upside bias. When I take a look at the daily chart of closes, now this market got itself into a little bit of a problem. It began here when the market started settling back on, this was last Friday, and now the market today, and this is a daily chart, coming back under that number, and we're back under there. So we're in a down thrust in this market from 1358. I think a big question that you have to ask is, will you get through this 1310 level? Market stopped at 1309.20 on the last break. I don't know if it will or won't. What I do know is it's still going to be an important zone. The pullback is nice to see. The market on Friday told you something, and if you read my report last night, if you get my research, I said that if the market takes out Friday's low, it's an outside day up, the odds favor the market's going to go back to the 18-day average of closes to regroup. Let's put on, first off, let's get to that day. Let me come back here and get the chart up to where we want. There's the next day. Let's put the swing lines on. You still have higher lows, higher highs. That's bullish. Let's get the moving averages on. The 18-day average when I wrote my report last night was 1340.40. I'm going by memory, but that's about where it was. And that's where I thought the market was going to head. And as it worked out, the market has done that. Obviously, if it takes out 1319.10, you're going to destroy the up pattern. What you will have is not a down pattern either. If this were to be taken out, you'd have a higher high and a lower low. Still not a trend. What you have right now is nothing. What do I mean by nothing? You have an uptrend as defined with higher lows and higher highs. That's called an uptrend. I have a filter on that of the 18-day average. When you close under that, I say the market has a downside bias. So you can't be in an uptrend with downside bias. So the two neutralize each other. When I look at the Bollinger Bands, the rally was not strong enough to get to the upper Bollinger Band. If it breaks through 1319, the potential is to challenge the old low of 1309.20. That's possible. And momentum-wise, the market with today's break is suddenly, and this is important, no longer overbought. The market was overbought on Friday. It got an 80.61 reading. Any number over 70 is overbought. By breaking the way it did, it's getting itself in balance. My own guess, and that's purely it, is we're going to spin around this 18-day average looking for direction next. When I come to the GLD ETF, a couple of things. If we come back to Friday, overbought. On Friday, you had an outside day down. So even though you had an outside day up in the futures, you had an outside day down on Friday in this market. If it follows through, one of the potential support zones I'd look for is the 18-day average of closes. It's exactly what you've done. Whether you slide through it or not doesn't matter. You're not trending. You have a pattern of a higher high and a lower low. That's not a trend. You're under the 18-day average, so there's downside bias. Momentum corrected, but I can't call that pointing down. It's corrected out of an overbought condition. I'm going to call this whole chart neutral. In GDX, today's low is 2186. If you take a look prior to this, and we can back up the chart, I think this is pretty good right here. You've got higher lows, higher highs. The green line's the 100-day average. That's the 18 in red. The market's got upside momentum. So I'd call the chart what? Not bullish. I'd call this still confused because even though you've got the higher lows and higher highs, my filter is you got to close over the 18-day average to be bullish. You didn't do that. So I've got downside bias with the swing line up and momentum pointing up. Still pretty confused. On Friday, the market backs off. It's still in that same pattern. It's now no longer oversold either. Remember right here, this is back to Wednesday. You have a reading under 30. It's oversold. Now it's not oversold, and today you're getting a backup with Friday and today's action. Let's assume the market goes through 2183. So what? Now you got a higher high and a lower low. That doesn't give me a trend either. Let's assume you don't take out 2183 and you get back over the 2280. I get friendly again. So it's easier to get bullish than bearish, but I'm nothing. The gold-silver ratio is plateaued out in the 80s. It's gone from 81.36 to 79.92, and it's stuck here near the 81 level right now. A historically high level, no question. On the silver market, you have the same type of nuttiness. Before I got ill, I told you, and this was Wednesday, here's a market that's got higher lows, higher highs, an outside day up, right into three levels of resistance. The 18-day average, the 200, and the 18, and this is on February 14th. The next day, the market tries to stick its neck up, and it's hitting the 200 along with everything and not going anywhere. The close is 1679.60. It is not over the 18-day average. Is that an uptrend? No. The swing line is up, but you're still under that 18-day average. You've moved away from being oversold. You start backing off on Friday. You back off a bit more today. I think it's very clear that this level, these three moving averages, are going to be problems for the silver. If it can overcome them and get away from them enough into the 1800s, they can also become support later on. Right now, they're formidable resistance. You tried to get over them here, and you lasted just over a week, and you paid for it, and they're fighting the battle again there. So I call this a confusing chart, too. In the copper market, I see no trend. I see a market that made a lower low, a higher high. It's overbought. It's trying to pull back to that 18-day average to find support against it, but I don't see a trend in this market at all. In the platinum market, we're having an outside day down, which probably sets up a trade top in this area until it's taken out. 18-day average, logical next support. The trend is up, higher lows, higher highs. The bias is up because you're over the 18-day average, but you're very overbought. In the palladium market, you're not overbought. That's number one. The momentum is still pointing to the upside. You have higher lows and higher highs. That's bullish. The bias is up because you're over the 18-day average. So it gives you two levels of support in the market. First, the 18-day average at 1021, then 1006. What it gives you is also an awful lot of risk under this formation, assuming you put your stop under the most recent low of 973.05. This market's very nicely saying, come on in and risk $2,500 a contract. Why? There's always something better than that. In the dollar index, we got down while I was going to the lower Bollinger Band and have since bounced up. Are we trending? No. You've got a higher high and a lower low. You've made it back to and slightly over the 18-day average of closes. FOMC notes coming out this week. Market's probably looking to see how hawkish they were, but I wouldn't be surprised to just see more back and forth parlance here as the market tries to figure out what to do next. And of course, looking over here at the stock market break, I have to tell you, I feel good about it in one sense. I called it. And I've told traders, I've told my friends, I said, it is not the market you had back in December and January. And those that have been trying to come in again, I've said, you're going to get opportunities. And I think I'm right on that. But I write about all this, and I write about it in my market research. I love to write. So I write 2 reports a day. And in those reports, I give you everything for tomorrow morning. So tonight's report will include estimates of the key reports tomorrow that are coming out, where they go, how I envision them. In other words, the reaction to them. Remember, you didn't get your energy reports today because of the holiday. A lot of things get pushed back one day. We had President's Day and all the federal offices were closed. But then to go along with that, you get my morning video. And admittedly, I was late today, my first day back. If I told you I overslept, it's true. Still getting my feet back under me. But to make a long story short, in these videos, I'll walk you through 40 charts and lay you out with ideas for trading during the day, in and out trades, position trades, where I think markets are headed. It's a real opportunity. It takes 15 minutes and I do them the same way, and you don't have to watch the whole thing because I go from the stocks to the currencies to the interest rates, the metals, all in the same way each day. You can skip on the bottom. Then my reports come out at 11:30 in the morning, and that's where the trade recommendations come out, and I'm telling you also what I'm seeing. So you get 2 elements of those recommendations, the video and then that. And then at night at 8 p.m., I start publishing again and getting you ready for the evening trade. So I'd like to give this to you. If you haven't tried it, give us a call. Go to our website. If you have tried it and you're not getting it, subscribe to it. You're watching me all these times anyways. You got nothing to lose, believe me. And we are coming up with a friends plan. In other words, if you're a subscriber and you turn a friend on and they buy from us, we're going to give you your 22 days because it's not a monthly subscription. It's every 22 days, which is a business month. You're going to get yours for a penny. So that's coming on, but you got to be a paid subscriber to bring other people in. It's a great way for me to get people, and I think you'll get to see what I'm doing. So again, there's the number, the website. You can click up here, and underneath us at any time, click there. On some of the websites, it'll take you right to the forms. I'm Ira Epstein. Good to be back.